Hey guys, this is Heather again, and this is going to be a quick video on some tips and tricks that I have personally learned in the last about 2 years now. And this is a video for beginners, and these are some harsh lessons that I have learned from actually making these mistakes. So I just wanted to sort of share those with the new traders so that you don't have to make them. So the first one is about stop loss and reward and risk. So whenever you're making a trade, you need to think about the reward, the risk that you're getting in. So let's say you make a trade and you enter here, let's say, and the price is, let's say, about 30 at 30, and your profit target is about 35. So let's say about here, and your loss or your stop loss is about 30, and your, let's say, winning rate is about 50%. Now that means since your profit target is 5% is $5 above, and your stop loss is $5 below, that means if you're winning 50% of the time, you are never going to make any profits. Similarly, let's say if you're winning 70% of the time, then that's a good strategy, and you can follow that strategy and you'll be completely fine. But please know these values when you're making these trades. What mostly happens with new people is that they have no idea, and they never write these values down, or they never think about it. They're just trading based on hunch, and they're just trading based on what they see, and there is no process. So there should always be a process when you're trading. It's not that fancy of a thing. You need discipline, you need a process, and you need a strategy if you want to trade and if you want to profit in the long term. So please keep that in mind. The second thing is a really important rule called the 2% rule. So this applies to just new people. I think once you get a little bit more experience, you'll know what to do. But when you create a new account, let's say you're putting $1,000 in your account and you want to trade options or you want to trade stocks, you should not put more than 2 to 4% of your capital uh, in one trade. So let's say you want to make a trade for $500. That's something that you should not do, because you are putting 50% of your capital into that trade. That's just madness. So please don't do that, because all it takes is 2 bad trades to occur to wipe out your entire account. The max that you can do, let's say if you have $1,000 account, is about $20 or $40 of trade. So that is going to be your one trade. Or even if you want to go above this, then 10% is too high. I think 5% is like the max that you should do if you are starting, because when you start trading, you'll realize that obviously you won't do well in the first few months. Eventually you won't do well for some period of time, and if you're not careful with your position sizing, then you're going to lose your entire account. So this is coming from someone who lost their entire account when I started trading. So I had a $2,000 account, and I lost it within, I think, 7 or 8 positions, because those positions were taking over my entire account, and the market went down, and I was out of money in 2 days. So please keep that in mind. Don't spend like 50% of your capital in one trade. That's just a recipe for disaster. Another point that I want to sort of make is hope has no place in trading. So please don't hope. If you, let's say, if you enter here, you are here, let's say you're doing fine, then the price starts to go down, and you think this is a really good company, this is going to come back. It goes down, it goes below the 20 moving average, which should be your first exit point. You should partially exit because the trend is reversing now, and you say that no, I know this is a good company, this is going to come back. Then the price actually goes below your entry price, but you are sure that this is going to come back. Please know that the price moves up and down for some reason. So let's say you are sure that this is going to come back, this starts coming back, and you just start buying more, because you are now averaging down. That doesn't always work, because now we have, let's say we have a resistance here, and so we touch it, we go down, and you are still sure this is going to go up. But now we finally cross the 50 moving average as well, which means that we are officially in a downtrend now. So you still don't, let's say you still don't sell. So what happens is, let's say within 1 month, the price is from about 45, the price is right now at about 17. So you're going to lose a lot of money if you just keep hoping. So please don't do that. Then I think another a very good point about using our platform, this works with trading, but this works particularly well with our platform, is that since there are so many tools here, you always want to find a confluence of factors from some of these tools before you go into a trade. So let's say you want to enter right here, you think this is a good point because we had, let's say, a little bit of a resistance here. We just broke it today and we closed above it. So let's say you want to enter here. That is just one confluence signal that we broke out of a resistance level. What you should do is you should go over some of these other tools that we have. So let's say you enter skills here, and you see that the calls to puts, if you know anything about options, then you'll know what this means. But if you don't, then that means that there was a lot of bearish pressure today, and although we broke out, people are still buying a lot of puts, which is again that it just tells you that there was bearish pressure. So you are not going to enter, because right now, let's say at this particular day, the price broke out, but on the options side, there is just not enough evidence that it's a good signal. Let's go back. Let's say we have skill here, and now let's say the RSI here. If you're a technical analysis trader, or if you want to use technical indicator, let's say at this point in time RSI goes above 80 as well. So that means now that this is now over bought. So, and that's not a good entry signal. So you might want to sort of skip that, because you're only able to find one confluence factor, but there are so many factors that are also going against it. So you don't want to go into that trade. However, if you found a trade where the RSI was just crossed below 20 and now it went above 20 with this one candle, and the options flow is very bullish, so that's a signal, because now you have 3 different confluence factors, and you're going to go in. So always try to find confluence factors. Then the last point would be to always follow the trend. So when the market overall, or at least the stocks that you are trying to that you are trading, are in an uptrend, then you should go bullish. If they're in a downtrend, then don't try to time the market. Like, timing the market is very hard. You should just flow with the trend. That's a relatively easier way of trading, because if you want to time these bottoms, how would you know this is going to bottom here? Like, if you were trading, and if you're even new, there is no signal that's telling you that it's going to bottom here. If you were a little bit experienced, maybe sure, but if you are a new trader, then you can't just time these bottoms, and you cannot average down, because if you start averaging down here, this is going to just keep going down. So you have no idea. This can easily go to zero for all you know. So always just exit when it hits your stop loss. Follow these patterns. Don't hope, and always follow the trend. When the trend is down, just sell if you are bullish. When the trend is up, you can buy, as long as the trend remains up. How do we know if the trend is up or down? We usually use these 20 and 50 moving averages. If the trend is very high, then we can actually use the 9 moving average as well, to see whether it's facing up or down. So that's how we know the trend. We would have exited here since the trend actually went below. Now both of these moving averages are facing downwards. Let's say here somewhere here would be an entry if we are bullish. So always try to follow the trend, because you have to flow with the trend in order to make the most gains in the market. That's just obviously my opinion. So these were some of the points that I have personally learned in the last few years, so please follow them. I'm sure that if you do, you are going to save yourself a lot of trouble. So that would be it for this series on introduction to trading. It was a mini series. We touched some random topics, but the idea was to give you an overview of what goes on and what are some of the pros and cons of these things that you're going to learn in your trading journey. So I hope this was helpful. I'll see you guys in some other video or in some other series. Thank you so much for watching it.